Hey everybody, this is John and welcome to the free video. And fairly volatile day today, although you can see that the VIX was actually fairly quiet. So that you might think like, okay, well, what's going on there? Well, if we look at stocks like Amazon, there's a lot of what I would call stock-specific, more disasters out there. You've got Amazon, you've got Tesla, you've got Facebook, Nvidia. But then, if you go into other sectors like Goldman Sachs is up $1.75 today, or $1.74, but you have other sectors that are kind of balancing it out. And so the question is that as we go into the long weekend, what are some things to expect? Well, the one thing I would be very, very aware of here is that the 10-day moving average of the put call ratio is now above 1. This is typically when major bottoms form. So, which makes sense because right now the news is all bad. It doesn't make sense that we would bottom. But I would just be very, very careful about being heavily short going into the long 3-day weekend. Keep in mind that Friday the markets are closed. However, in this kind of environment, doing long strangles, Delta 30 strangles, is great because it doesn't matter if the market pukes or reverses hard, the strangle will benefit because those out of the money options increase at a faster percentage rate than the in the money options on these big reversals. And they've been very, very awesome in this environment. Also, keep in mind that the sectors today that are having the biggest problems are sectors that are kind of playing catch up. So while XLP has already taken out February lows, the semis, which have been holding up great, are kind of playing catch up and coming down to that level. If we look at the key sectors today, even though there was a bloodbath in a lot of stocks, in terms of key sectors, you can see at the end of the day, biotech was up, 1.5%, real estate 1.5%, utilities were quiet, consumer staples, trying to bottom out here, healthcare. So, the selling a little bit more selective today than what we've seen, at least than what we saw on Friday and yesterday. So those are all the things here to keep in mind. I've got a lot of stuff to cover in the premium video too for some other markets that we're looking at and stuff like that too. But the main thing here is just keeping in mind that we are looking at that W-shaped bottom that's forming just as planned. We got that put call ratio over 1, so the recipe is there for, I think in a perfect world here, we actually would see the S&Ps take out the February lows and cause a flush, and then from there we potentially get a W bottom. All right, hope it helps. Have a fantastic evening, and we'll see you at the next update.